Today's top three things, I'm going to go through a lot of those commodity and dollar-related things after I go through the top three things. But first, I'm going to hit on China, then I'm going to go through Europe, and then I'm going to go through what's going on in the oil market specifically. So first on China, if things get bad in your economy, all you have to do is just say the word stimulus. And there you go, your stock market will take off, and the very few will capitalize on what the very many are absolutely ignorant of, which is, of course, economic reality. So again, central planners think that they've convinced the world that China is doing the exact same thing that the Japanese and Europeans have, that if they have bad economic data, they just get the stock market up, and then the press reports it as good. So again, that's what happened in the Shanghai Composite Index last night, up 2.3% to 6.6% for the year to date, with the S&P 500 actually down 0.3%. So magnificent performance for an economy that's deteriorating. Point number two, all across Europe, you're starting to hear people say, well, Europe is good now, Greece is fixed. Newsflash, Greek stock market is down 19% since February the 24th when mainstream started saying, hey, look, Greece is fixed. Well, one thing is for sure, Greece is not fixed. So again, if you look at what's going on in Europe more specifically, what they're doing is burning their currency at the stake. So you can see this obviously. But again, if you look at their year-to-date returns of something like Germany, which is now up almost 23% for the year-to-date, these are fantastic returns for central planning. So central planners, I should say, and central planning are going to get more confident, more cocksure of themselves, more buoyant, and they're going to do more and more and more. Heck, in Lithuania, the stock market is up 65% for the year to date. You can go to Lithuania and tell me what's going on in Lithuania. Nice chart, though. Finally, oil, not good. So again, if you are on the other side of this, and we've said this multiple times, if the yen and euro will be burnt to a crisp and the Chinese go full central planning, then the dollar is going to go parabolic. If the dollar goes parabolic, oil will go down in a barrel of flames. Now, you could see that quite coherently this morning. Oil is testing the lows that it saw in January. So again, anyone who chased the oil bounce of February is getting their face ripped off. That's not cool to do on a Monday. But the reality is that we're right back to where we were. Global deflation remains paramount. Oil was the leading indicator on this. And again, if you're long a bad energy company or a levered energy bond or a bad company with bonds, again, there's a lot of things, not to mention Lynn Energy, which should go to zero. That is a problem for energy investors. Again, the risk range is now widening, which is a leading indicator for rising volatility. Again, if you get oil volatility back to 60-something, that's going to be a big problem for a lot of people who are along of it. So those are your top three things.